So it's been an eventful November with the presidential election and the destructive mountain fire in Camarillo and Santa Paula, which has damaged or destroyed over 200 homes. And for those affected by the fire, RE/MAX Gold Coast Property Management has several fully furnished homes that are in move-in ready condition. Just call the office at 805-832-4075. Lastly, the Fed announced its second rate cut of a quarter point this year. So with all this happening, we will take a look at interest rates, some seasonal trends, and some seasonal anomalies happening in our local real estate market. I'm Harold Powell, a local real estate agent serving Ventura and the surrounding communities. And if you want to stay up to date on all things real estate for the area, well, suggest hitting the like, subscribe, and bell icon to be notified of future content. All right, so let's address interest rates. We saw interest rates drop in August and September to the low 6% range. The Fed cut the Fed funds rate by 0.5% in mid-September. And by mid-October, we saw rates up to 6.5% and then up to 7% by the beginning of November. So while the Fed has lowered the Fed funds rate another quarter point, the question is, why aren't we seeing rates go the same direction? Well, mortgage rates are tied to the 10-year bonds, and the direction of the stock market will often be a strong factor in the direction of the bond market. And my simple explanation is that when the stock market goes up, the bond market has to raise the yield in order to attract money, since it's competing for the investors' dollars. And if the stock market is flat or starts going down, well, investors look to put money into bonds as a safe haven for the investor. As investors move money to bonds rather than stocks, it lowers the yield, which in turn lowers the mortgage rates that are offered to buyers. So the good news is that rates are expected to come back down. So let's take a look at what we're seeing in our local real estate market. Typically, this time of year, we do see a seasonal decline in the number of new homes coming on the market. And that typically begins in September and runs through December. And this year appears to be any different than the previous year. So we take a look at the graph, you're going to see the blue line represents new inventory coming on the market, and it's trending downward for October and November. And the November numbers for new inventory coming on the market are looking to be lower than October. Now, what is surprising is the number of solds in October of this year. It's actually 20% higher in October than September. But even more eye-opening is the fact that October solds recorded the highest number of solds for the entire year, higher than any of the summer or spring months of this year. And that is definitely an anomaly. So why is that? Well, as I mentioned earlier, the interest rates began dropping in August and September to the low 6% range. And more importantly, we actually saw mortgage loan applications increase 14% in September due to the rates dropping. So this is a precursor event to the purchase of a home. So it appears that the increase in solds for October were likely driven by the decrease in interest rates. So the question remains if the increase in the interest rate will temper demand for December, or will we see the interest rate begin to drop back down to the low 6 range by the end of the year? Last thing I wanted to show you is the overall supply of homes is dramatically better at the end of this year compared to last year, as well as compared to earlier this year. As you look at the for sale numbers for October, we're at
1,006 homes
on the market, which represent about a 41% more homes on the market than this time last year for the end of October. So this means you'll have more to pick and choose from and not likely to have to deal as many competing buyers on the same property. Additionally, if you are a seller, well, you'll likely be competing with more than another property on the market than you were a year ago, but you still are in a seller's market with about 2 months of inventory. And if you are a seller looking to buy, you'll have an easier time getting your offer accepted if you do have a contingency of closing your escrow on your existing home. Hope you enjoyed this video. If so, give it a thumbs up. Thanks.